Good morning, everyone. Welcome to all the audience who have joined us in South Africa, Africa, Mauritius, and around the globe. I'm very pleased to welcome you to the fourth episode of our Carrick Property webinar series. Today, we are partnering with SevenCapital, and we're going to be talking about investing in international property, specifically in Slough and Bracknell in the UK. There's a lot of talk about the sort of tertiary areas within the UK and why we believe these are strong investment cases and opportunities for people that are persons who are wanting to invest abroad. I'm very pleased to be partnering with SevenCapital. Those of you who are not aware, SevenCapital is one of the top investment and development companies in the UK. And we have a long-standing relationship with SevenCapital and very proud to be partnering them. Today, the main host of the webinar will be Craig Warwick, and Craig is the South African and African representative for SevenCapital. Craig and I have partnered over the last year to bring real investment opportunities and specifically developments that we believe suit the South African, and Mauritius markets. I'm very, very pleased to welcome Craig Warwick.
Thank you very much, Brad. Thanks for the intro, and we're equally excited about the partnership with the Carrick team and yourself in Africa. As Brad said, I'm the business development manager for Southern Africa for SevenCapital, based in South Africa in Joburg. We've got a head office for Africa. Brad, obviously, group sales director for Carrick Wealth, and yeah, just very pleased to be partnered with you guys. Next slide, please, Chloe. So topics of discussion today for the webinar, we're going to be covering the UK property predictions for the year ahead in 2021, latest developments, opportunities that you could look at from the investment perspective. The Grand Exchange is an off-plan development. The Metalworks and Eton House are completed developments, pretty much ready to go at this stage. Then why SevenCapital? Probably one of the most important parts of the entire webinar and presentation. It's key partnering with the right developer on the ground, especially when you're looking at something offshore, to make sure that the build quality and all of those good elements are in place. So I'll be covering that, and then right at the end we'll do a Q&A session. There's a couple of frequently asked questions that I'll cover, and then if you scroll down to the bottom of your screen, you'll see a Q&A block where you can post questions throughout the webinar. And we'll tackle as many of those questions at the end of the presentation as well. Next slide. Next slide. So looking at the values of property and what's predicted for the year ahead in 2021, using the professionals on the ground, Rightmove, Knight Frank, Zoopla, Savills, each predicting kind of slightly different but pretty similar predictions for the year ahead. Rightmove looking at property prices rising by about 4% in 2021. Knight Frank and Zoopla 1 to 1.5%. Savills are saying that they see it remaining flat for the year ahead, but then it's going to accelerate dramatically in 2022. That could play quite nicely into a off-plan development, for example, where you're putting down 20% and then seeing capital appreciation over the build phase over the next year or two. But I'll get back to that later in the presentation. Hotspots, if you look at the right-hand bottom corner, West Midlands, Birmingham, predicted to see over the next 5 years about a 20% increase. Bracknell 11+%, and Slough, just outside London, almost 18% according to the professionals on the ground in the UK. So just giving you a bit of a landscape as to what the professionals are saying as to what's going to happen with the market and pricing related to that. Next slide. Our predictions for the UK property market as SevenCapital, if you look at the last 40 years in the property market in the UK, as you can see in the left-hand column, the property values doubled in 5 years for the 5-year period from 1977 to 82. The following kind of column shows you a 6-year period in which the property values doubled. And then it started to stretch out slightly from there. 13 years, 14 years in the last time frame or window period. And we're predicting around 15 to 20 years from 2019, call it 2020, 2021, as to the time frame when property values will double. For the most part, and I'll get to this later in the presentation, this isn't necessarily a short-term investment. As all of you will know, property is a long-term investment, a stable investment. And you will see the property values doubling in the UK within a 15 to call it a 20-year period from where we're sitting at right now. Next slide. Don't try to time the market. I think that's something that all of us struggle with a little bit. You always try and make sure that you're getting into the right market at the right time. We have a saying, it's not about timing the market, but rather time in the market. And that is very prevalent in the UK, as you saw from the previous slide. Property values always double over time. And although that window stretches out slightly as you look forward into the future, you are pretty much guaranteed based on history that the property values will double. When you're looking at a long investment cycle, 10, 15, 20 years, which most of you would be with property investment, you almost don't have to time the market. There will be troughs and hills and valleys and that type of thing throughout the investment cycle. But in that 15-year, 20-year time frame, it will be sustainable and you will see sustainable growth over time. Stamp duty, land tax reductions until the end of March this year. SDLT is part of your transactional costs, as you guys all know. There is a current reduction of around 2%, 3%, and that is set to increase post the end of March this year. There's the possibility of a slight grace period on that, but the opportunity exists right now to take advantage of those reductions and save on your transactional costs. Property prices are holding strong at the moment, and there's growing tenant demand, which I'll get to later in the presentation. There's a massive surge of newcomers into young professionals coming into the market that would rather rent than purchase property for a host of reasons. And that's just feeding this tenant demand and obviously the investment case for investors into the UK. Next slide. So what's happening in the market, or what's happened in the market since 2016? I think the word on everyone's lips when looking into the UK has been Brexit. Created a lot of uncertainty, a lot of confusion, not only locally in Africa and Southern Africa, but also on the ground in the UK. That's behind us now. Brexit's happened, the UK is stable, and I think it was almost dwarfed at the end of the year, or throughout last year, end of 2020, when we started going into lockdown. Coronavirus kicked in, and that obviously now became the most topical thing. UK property market actually experienced a boom in the second half of 2020 coming out of hard lockdown. And that, although it's skewed by the fact that there wasn't a lot of movement in the market during lockdown, transactions were up 19% year on year against the end of 2019. Property prices rose year on year by 7%, over 7%, the highest increase in 6 years. And activity in the UK property market reached record-breaking levels. I think it was September or October last year. It was the highest amount of rental viewings for the last 6 or 7 years, if I'm not mistaken. So you can see the activity within the rental market in the UK is very, very high, and it hasn't been affected dramatically by the various elements attached to Brexit and obviously coronavirus. Coronavirus unmasked, just looking at where we're at right now. The circulation of the vaccine in the UK is likely to give demand another boost. There's a lot of certainty. It's created a lot of certainty as to how the country's actually handled the rollout. And property prices skyrocketed, as I says, as I said, by over 7% throughout 2020 in a very volatile market. And that's set to continue to rise, according to Rightmove, by a further 4% in 2021. So there is growth in the market, although it's a challenging time. You can see the rental market is very buoyant in the UK. Next slide. So looking at actual developments and some opportunities within these markets. First off, next slide. So as a developer, SevenCapital, our kind of key objective is identifying growth hotspots throughout the UK, where there's a clear sight of regeneration schemes that are well underway and approved by council, regentrification, infrastructure upgrades, most importantly, a lot of commercial upgrades taking place and development taking place. When I say infrastructure, the likes of Crossrail, a £20 billion rail upgrade along the commuter belt, all the way from Reading leading into London, into the heart of London. We have a look, for example, in Bracknell, almost £1 billion worth of regeneration taking place inside Bracknell, and that kind of stretches across leisure, retail, commercial, and residential. But that's a key component of us identifying the right area to invest in at the right time. Next slide. So why Bracknell as an area? Next slide. All right. So Bracknell has been cited by Boris Johnson as the epicenter for free trade, and it's got the largest tech cluster outside of London. It's been called the kind of Silicon Valley for the UK. And if you look to the right, these are massive headquartered companies in the tech space that are based in Bracknell. Microsoft, Fujitsu, Dell, Oracle, HP, all big tech firms headquartered in Bracknell. And these all obviously have young tech professionals working within these companies in this region. And these are guys looking for modern accommodation in the area. Nearly 50% of the population are in management and director roles. Interesting stat, I think the national average at the moment, national average salary per capita in the UK is around £28,000. Bracknell is almost double that at 48,000 pounds. So these are highly paid tech professionals, perfect profile tenant for a landlord and owner within the buy-to-let space. Almost 500,000 easily accessible jobs across engineering, tech, and the financial sectors. And Bracknell is at the top 10 national productivity GVA with the local economy, and the office sector includes 450,000 square foot of office accommodation. So there's a lot coming. There's a lot of companies that are going to be moving into Bracknell, and there's a lot already in Bracknell, creating a surge in tenant demand for really high-end apartments. Next slide. Just looking at the connectivity, unrivaled connectivity without a doubt. Reading 22 minutes away, Heathrow 24 minutes away currently on the rail, and 51 minutes currently into Paddington Station in London. So it's got the connectivity, even though just it's important to point out, yeah, these are guys that live, work, and play in Bracknell. And I'll get to the play element and what the kind of money that's being spent in Bracknell. But these guys might need to, from time to time, consult, go to Heathrow Airport for travel, go into central London, etc. In terms of the regeneration, sorry, next slide. Yeah, thank you. If you look to the right, this is the newly built Lexicon Centre, almost a £240 million joint venture, retail, mixed retail, leisure centre. All the biggest high-end retail brands, Fenwick's, Waitrose, Marks and Spencer. There's a cinema. It's got absolutely everything, and this is what was lacking before in Bracknell. So you needed to travel for the lifestyle elements. Now it's on your doorstep, within walking distance from the developments that we'll talk about today. There's a massive regeneration plan underway, almost £1 billion worth, and that's taking place over a 20-year period. And you can see it when you go to the city now. You can see that really taking place in the renewal coming through. Next slide. So just a bit of a visual on the regeneration plan in Bracknell. If you look at the top left-hand slide, That's the Lexicon Centre right now. If you look at short term, obviously that's going to be expanding. Mid, there's going to be a lot of highway infrastructure upgrades, roadworks, etc. And then if you look at the finished plan in 2032, that is the fully developed regeneration plan of close to £1 billion in Bracknell. And if you can see the little blue icon with a cross in it, that is our site, the Grand Exchange, within that regeneration catchment area. Next slide. So looking at tenant demand and property prices in Bracknell, Bracknell's growing an average of 2.5 times faster than the wider economy in the UK. It was originally built for 25,000 residents, already home to 120,000 residents. So there's a massive surge in growth within the tenant pool and tenant demand in the area. And that's set to grow by another estimated 15% by 2036, which is when that completed expansion plan, regeneration plan will be done. Tons of office space available, and they're looking at actually turning that into luxury new build planning. Apartments in the region have already seen prices rise by 30% over the last 5 years, according to Zoopla. That's a massive cap appreciation on an asset within a 5-year period. And that speaks into what I was saying earlier, that you will see within a 15, 20-year period, that doubling in value of the asset in the long term. Average property price is sitting at around £380,000, £387,000. Bracknell's seen growth of nearly 250% over the last 20 years. So there's massive growth in the property sector within this market. Next slide. So looking at the Grand Exchange, as you can see, ultra modern, brand new build from the ground up, currently under construction. We've broken ground on the site. Luxury studios, 1 and 2 bed apartments, average 10% higher rental yields in Bracknell than neighbouring Reading. 20-minute commute into Reading direct, and that will give you connectivity onto the Crossrail system directly into London later this year. And it'll be a couple of minutes, 20, 25 minutes into central London. So brilliant connectivity again. It's a landmark site for us, iconic destination, lobby entrance, 24-hour concierge. It's got a private gym. It's got residents-only lounge, co-working space, which is becoming increasingly popular and high in demand. Secure gated private basement parking, which is like hen's teeth in the UK. That adds a lot of value, a lot of demand to this development in a market like Bracknell. Estimated completion on that is Q1 2023. Therein lies an opportunity for investors on a couple of levels. The first being that you would only be putting down a 20% deposit if you look at the bottom 3 points. Studios, 1s and 2 beds, 20% deposit now, and then you wait until Q1 2023. There's no incremental build payments along the way, and you see the capital appreciation, if any, over the build phase on that entire value of that property. So this is a fantastic opportunity. There's nothing like it in the market, and it's got all the amenities setting it apart from anything else out there. Next slide. So looking at Slough, closer to London. Next slide. Slough is essentially on the Crossrail line, 18 minutes outside of Paddington Station on Crossrail 1 station. It's a thriving commercial landscape with global headquarters, if you look to the right. Similarly to Bracknell, massive headquartered companies, the likes of Land Rover, Amazon, Jeep, Mars, Lego, O2. The Slough trading estate is one of the largest trading estates in Europe. 500 companies under one roof, and therein obviously is a massive pool of executive and professional tenants, creating a surge in demand in this market as well. Slough has around 68,000 jobs, as I said, global headquarters, and it's the most productive urban area in the UK, with a GVA per worker of £82,000. And as I said, the largest trading estate under single ownership in Europe. So there's a massive amount of commercial activity and a massive amount of residential demand coming through from that. Next slide. Looking at the Crossrail system, providing direct access into London and along the commuter belt. Currently 18 minutes into Paddington Station, 23 minutes to Heathrow, 12 minutes to Eton. If you look at the train timelines in the top left-hand corner, you'll be able to get into the heart of London, central stops in London within minutes once the Crossrail system, this £20 billion rail system, is fully operational from March, April this year. So that's giving it massive appeal for commuters, guys that want to move out of the capital in London, live just outside of the commuter belt, commuting every day, as well as professionals working within those companies that I showed you earlier that need the connectivity both to Heathrow and to central London and along the commuter belt as a whole. Next slide. Looking at the tenant demand and the property prices within the Slough market, Slough is ranked number 2 for connectivity in Europe. Obviously, the Crossrail system just puts it, above everything else. JLL forecast around 18% property price growth and 8% rental price growth by 2025 in the southeast and obviously in the Slough area. So there's definitely potential for a lot of investment return within a market like this. 46% of Slough homes are let to London renters. Slough Urban Renewal Project, similar to the Urban Renewal Project in Bracknell, £1.5 billion regeneration project well underway, and that is changing the face of Slough. Historically, it was a light industrial manufacturing town. A lot of those lifestyle elements that you saw in Bracknell are starting to be injected into Slough now as well. High street upgrades, leisure, and obviously the residential on the back of that. Home to global brands and increasing career opportunities. Over 5,500 businesses located in Slough. So there's a massive amount of commercial activity there. Next slide. Looking at the development and the opportunity in Slough, the Metalworks is a brand new build. It's just been completed in January this year. Luxury 1 and 2 bed apartments. These are larger apartments than anything on the market in Slough for the same, if not less, prices. So good value for money. The uptake in terms of the letting of these properties has been phenomenal with our partners in the area. There's literally a waiting list of guys wanting to get into this development. It's a private gated development, high quality, spacious apartments, as I said, 100 meters away from the Slough Crossrail station. So 18 minutes into central London. So connectivity, you could not get better. Show apartment is launched. We've actually got walkthrough live videos of all the apartments. Obviously, given the travel restrictions, we started going that route. So you are able to do an actual view of the live finished apartment with us. And we can arrange that for you. JLL forecasting close to 18% capital growth by 2024 in this market and on this development. And you're buying in by buying, call it off plan or brand new build, you're buying in around 14% below market value if you look at the price per square foot on new builds comparable in the area. Just looking at the actual units, we've got 1 beds available from around £300,000, again 20% deposits up front, and 2 beds from around £370,000. I think there is only one of the 1 beds left, so if that was of interest, you'd obviously need to get hold of us as soon as possible. Next slide, please. Another development in Slough, New Eton House. This is a completed build. It's a conversion, ultra modern, cash buy exclusive, and we're looking at completed luxury 1 and 2 bedroom apartments. This development is minutes away from that Slough trading estate with the 500 companies. So that would be the tenant profile that would for all purposes really take to this development. Premium contemporary living, modern professional tenants, that's kind of your tenant profile. And then JLL, yeah, again, same market, predicting close to 18% capital growth by 2024. 1 beds, you're looking at £240,000, and 2 beds, £360,000 in this development. And as you can see on the right, ultra modern finishes, stunning developments. Next slide, please. So why choose SevenCapital? Just to show you the differentiators of us in the market. Next slide, please. So as a group, you can see seven media, 7 homes is residential houses, 7 events is our events firm, marketing company, 7 retail. We do a lot of high street retail. We own a couple of centres. 7 industrial are the big warehouses that we build and sell or let out to the big distribution firms in the UK. Colmore is probably one of the most, if not the most important point here. Colmore is our construction company as part of the group. The fact that we own our own construction company allows us gives us the ability rather to manage the timelines on the build and manage the build quality most importantly. So we know what kind of finished product we're getting. Our clients know what kind of finished product they're getting. And most of the time, 9 times out of 10, everything is on time and obviously delivered to the highest quality levels. Synergy Bank is the Bank of Cyprus. We bought that around 3 years ago with a loan book of around £1.5 billion. We've grown that to close to £3 billion since. And then the Park Regis is our hotel chain, 48 hotels internationally. And Staywell is the hospitality group that we own as part of the group that runs those hotels and manages those hotels. So just to show you the size of the company as a whole. Next slide. Looking at the residential and the buy-to-let side of the business, obviously what we're talking about today. To date, £2.1 billion property portfolio delivered. We've got 130 property professionals. 50%, over 50% of our staff complement are client-centric or customer care-focused professionals, which ensure that obviously you're assisted every step of the way throughout the cycle. Total portfolio close to 8 million square feet to date, and over 6,500 units delivered to date. So we've got a solid track record to date. Next slide. Looking at the completed developments today, 29 developments that we completed to date. These names wouldn't mean much to you, but I think the importance here or the takeaway from the slide really is that we've got a 100% track record. Every project we've set out to complete, we have, and that's what you should be looking for in a developer and in an investment partner, especially in the UK market. Next slide. This will give you just a bit of a visual sense of the quality of the build, the design elements of our developments, of some of the completed stock that we delivered today. Next slide, please. Under construction at the moment, we've got 8 developments under construction. Some sold out off plan, and some still available, but it just gives you a sense of looking into the future. If you're looking to build a portfolio over time, we as a company would deliver anything from 2 to 3 new developments per year that you could look at in the off-plan space. Next slide, please. All right, so just in terms of the service offering from our side and the structure of our business, it'll speak into obviously the security and the stability of the investment for you as an investor. SevenCapital really is structured as a full turnkey developer, and the product almost as a full turnkey investment. Award-winning customer services, as you can see, very proud at the bottom of the slide there. Luxury apartments designed for professional demand. Prime strategic locations, as I said earlier, that's probably the most important point for us, is making sure we're in a strategic growth region at all times. Luxury internal specifications sets us apart from what's on the market at the moment. Projected 5 to 6% rental yields, and then off-plan and completed developments. The important thing to note around the slide is the fact that not only are you buying directly from the source, from the developer, as I said, there's no middleman or third party involved. We have a panel of solicitors that would assist you with the legal elements of the transaction in the UK. We have our partners, Visionary Finance, who can arrange a mortgage for you. Can arrange a mortgage for you in the UK. We have our internal furnishings department, so we would fully furnish the apartment for you once complete if needed. And then probably most importantly, our partner letting agents on the back end. So once it's complete, furnished, we would then find the tenant for you through our partner letting agents, vet that tenant, put the lease in place, and then manage it for you ongoing. Everything down to your rental collections and paying over the owner costs. So that's as hands-off as you could possibly want. Next slide. Just a bit of a visual in terms of our sales offices globally. Obviously headquartered in the UK, head office in Birmingham in the West Midlands, and we have an office in London, Switzerland, Dubai, India, China, Hong Kong, Singapore, and then the South Africa office looking after Southern Africa and Mauritius. Those are our sales offices globally. Next slide. Okay, thank you very much. There are a couple of frequently asked questions that we will answer, and then we'll have a look at some of the questions that may have been submitted during the webinar. Next slide. Where do you see the UK buy-to-let market, both in the short and long term? The buy-to-let market, or the rental market in the UK, is growing exponentially at this stage. Going back 15, 20, 30 years, our parents always said to us, buy property, don't rent, it's wasted money, it's lost money. That's changed dramatically for a number of reasons. The newcomers into the market, the young professionals, first off, don't necessarily have 40, 50, 60,000 pounds deposit, which is now required to purchase property. In addition to that, they want to be as mobile and transient as possible from an opportunity and a travel perspective, from a lifestyle perspective. So there's the surge of what they've called generation rent coming through into the market, with over 50% at this stage of UK residents or population wanting to rent or renting already. So that's growing constantly, and that's feeding into the buy-to-let property market. In addition to that, there's, as most of you will know, if not all of you, there's a massive housing shortage in the UK. Current targets of new build are around 300 new homes, or 300,000 new homes required per annum. Delivery on any given year is around 160,000 new homes. So they're falling short, and it's just creating this almost like perfect storm in terms of what you'd be looking for as an investor. Undersupply of stock and massive demand coming through for rental homes. Next slide. Is the tenant demand still high, even with most people working from home, especially along the commuter belt? Absolutely. As you saw from the stats in the earlier slides, and we'll share this presentation with you guys so you can look at it again. Last year was a record year for viewings, or month rather, for viewings. I think it was September or October. So the rental market is growing. We're finding a lot of people looking to move into slightly larger apartments, possibly move from 1 into 2-bed apartments if it's couples, so that they can create these home working spaces comfortably. And then along the commuter belt, absolutely even more so, there's more tenant demand because people are looking at moving outside London, move out of the capital onto the commuter belt. The connectivity is coming through from Crossrail, the new rail system, if they need to go into the capital. And they're saving, in some cases, up to 50% of their living costs are moving out of London, just outside onto the commuter belt in towns like Slough and Bracknell. Next slide. What are the finance options for SA and African clients? As I said before, we've got our partners on the ground in the UK, Visionary Finance, best in the business. They're able to take the local SA deals and Africa deals to the various lenders. There's a number of lenders that work with Africa. At the moment, as I'm sure you would be or could be aware, the mortgage market is slightly compressed. Lenders are being cautious coming out of COVID. We're seeing loan to values, mortgages are between 50 and 60% loan to value come through for clients, rates of around 3.5%. Here and there, a 75% loan to value, but it's very scarce. That will turn over time, probably over the next 18 to 24 months. The mortgage market is said to correct itself, and you probably see in end of 2022 going into 2023, loan to values go back up to the 75% odd kind of loan to value level. If you were looking at something like the Grand Exchange, for example, that would be absolutely perfect. You're putting down 20% now, and you're waiting until end of 2022 when the market corrects, and then you'd be looking at a more favorable mortgage, just as an idea. Next slide. Can you tell me more about the management that SevenCapital offer? Absolutely. So our partner letting agents are on a panel with us because of the scale of our business. We've negotiated really good rates with the letting agents. As an example, if you went direct to a letting agent on the high street and asked them to manage a property for you, they would charge you anything between 12 and 15% of the rental. Because of the size of our business and the negotiation from our side, you'd be paying around 8%. So it's quite a dramatic saving on the letting or the management part side of your investment. And that is fully managed. That is the letting agents, obviously, as I said, finding the tenant, vetting them correctly, putting them in place, managing that lease for you, doing checks from time to time, doing outgoing checks, and then obviously replacement tenants and leases. So it's as managed as you could possibly want for an outside investor offshore. Next slide. Okay. Just have a look at the questions that have come through. Okay, from Eddie, do you offer expat buy to rent mortgages? There are expat options available through Visionary Finance. So yes, the answer to that is yes. Any idea how the rent will be taxed if property is bought through an offshore company? Brad, can I throw this one over to you?
Yeah, look, I mean, I think each case has to be looked at. You know, we have to understand the merits of each individual applicant. So, and what the situation is. So we have tax experts available to advise us and ensure that we structure the deals in the best possible way that benefits the investor. But you know, in truth, we're not tax experts, so we would certainly look to our partners in that regard. So Eddie, when you are ready to engage, we would certainly engage our tax experts to give you that advice and ensure that the structure that you choose is of benefit to you.
Brilliant, brilliant. Thanks, Brad. Guys, that's pretty much it at this stage. Just a huge thank you from our side, both to Carrick and to you guys for joining us today. If there's any interest on anything you've seen today, feel free to reach out to your financial advisor, to the Carrick team. We'd be happy to do a Zoom meeting and explore options and obviously look at the best options based on your objectives.
So Craig, thanks very much for today. Certainly you shared some really valuable insights into the UK market, and the developments that you gave us sight of today are fantastic developments and great investment cases. So thank you to you and your team, and thank you to everybody today for attending across Africa and South Africa. We really appreciate it, and we look forward to talking to you soon. Otherwise, we'll see you next Thursday, same time. Bye-bye.
Thank you. Thank you, everyone. Goodbye.